Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets likely to consolidate in a narrow range post previous weeks with surge. Also a trend which prevailed in previous session. Absence of positive trigger domestically weighs down on the range-bound sentiment. We'll talk about the GIFT Nifty. Well, trends in GIFT Nifty there indicates a flat to negative start coming in for broader index in India with loss of 0.1%. US stocks, they gained overnight on mounting expectation of an interest rate cut from the Federal Reserve in the coming year. Talk about Asian share. Well, they've steadied early on Tuesday as traders' focus turned now on Japan's central bank and whether it might edge further away from its ultra-easing monetary policy. FIIs have taken a breather too. They've sold shares to an extent of 33 crore. DIIs, on the other hand, have bought in equities to an extent of 413 crore. Primary markets expected to be a buzz with activity for main board IPOs open for bidding. Theme of the day apparently could be PSU banks, oil marketing companies, and not forget IT companies. But that's what we have in terms of the entire trade setup. Of course, it's a consolidation move per se, but I'll not be surprised if these dips are bought into. But to take the discussion forward, Kunal Rambhia, the fund manager at the Streets, joins us. Morning there.
Morning, Nickey.
Kunal, what are you making out of this current consolidation move that we apparently are facing after the big surge that came in the previous week? Your immediate support and resistance level, and also do you still think this is a buy on dips market?
Nickey, we saw the massive rally, and if you look at the last 2 months' behavior, the Nifty has gone up by almost 14%, to be precise, 2,600 plus points. And now we are heading for this consolidation. But yeah, as of now, the trend seems to be very much intact. It has a lot of strength. I will not be really keen to buy at the peak level, but I'll wait for some kind of consolidation, as you rightly mentioned, with some kind of correction coming in. I think the levels to watch out now on the Nifty spot level will be 21,250 as a support, which is almost 200 points away from the present level. And on the resistance front, we can expect the levels of around 21,550 levels. These are the two levels to watch out for the immediate support and resistance on the Nifty spot levels.
Kunal, Bank Nifty, what's your view on that? A bit of apparently, we've seen some traction in the previous week. Of course, FII activity is expected to further bring in more action within the space going forward. But what can one make out of today's move and immediate support and resistance level, along with that, a stock recommendation with Bank Nifty?
So if you look at the Bank Nifty, yes, it's been more or less a kind of laggard compared to the Nifty. So immediate support on the Bank Nifty is 47,650. Again, I'm talking about the spot Nifty. So 47,650 is a support to watch out for. And on the resistance front, we have 48,175 to 48,200 kind of levels, which are immediate resistance. I would, in fact, be more keen to short Bank Nifty from the present levels compared to Nifty because of the inherent weakness. Now, if we come to the stock recommendations, I think the counters to watch out will be Indiabulls Housing Finance and SBI Cards. I think these two counters are looking very attractive at the present level. SBI Cards can be bought with the target of around 900 and the stop loss of 770. And the Indiabulls Housing can be bought at the present level with the stop loss of around 225 and the target being 245.
All right, that's the view coming in there. But let's address the market open. Well, 0.1% of gains coming in for the market, 21,400 mark. It is a good start to the market. Let's just say a flat start with positive bias. Talk about Bank Nifty just to see how is that shaping up. Well, you have Bank Nifty right now weighing down on the sentiment a little bit. Not doing too. Typically, it's a negative start coming in for Bank Nifty. And also in terms of the PSU banks, let's look at that. And there's actually a brilliant re-rating report which has come in from Motilal Oswal stable on PSU banks. It says re-rating 2.0 and spoke, in extensively about detail about what's working in the favor of these PSU banks. Well, no surprise there. It is the trend. It is a theme which has been outperforming the markets by a huge margin from the start of the year. And today's session, it's acting no different. 0.4% locked in on that one. Talk about mid-cap and the small-cap index, just to see if that is also there is an outperformance coming in from the mid-cap basket, and small-cap too is acting no differently. A bit of traction seen even on the small-cap index, 0.5% of gains coming in for BSE small-cap index. But Nifty IT, if we could pull that up, because IT has been doing typically well. For the last couple of days, we've seen a few stocks doing well, but a bit of profit booking in early deals. Metal too is something that we like to watch out for. Of course, the big theme for 2024 is rate cuts. So auto, real estate, along with that NBFCs, these are typically going to be the theme to play out for in 2024. Top gainers and the top losers. Well, let's just see what's actually working in the favor of the markets. And the top gainers there on your screen. Nestle India, Coal India, ONGC. These are some of the top gainers that you have on the screen right now. Apart from that, Britannia, Reliance and Sun Pharma. So it is the FMCG basket along with that of RIL, which is lending some amount of support to the markets right now. And if you also talk about the top losers that we have on the index, well, TCS, Bajaj Auto, M&M. These are some of the top losers that we have. Apart from that, Kotak Mahindra Bank, HDFC Bank and Titan. Well, banking names there along with some IT names as the losers. But Kunal, come in on this one. What do you make out of the present scenario in the IT space? What do you like within the space? Are you recommending something within that space which looks attractive at this point of time?
So yes, Nickey, if you look at the overall basket, that has done remarkably well in the last week. But at the same time, if I look at the fresh breakout, which I can see is on the Wipro, now this breakout is at around 443, 444 levels. I think this counter is decisively staying above that level. So yes, one can initiate a buy on Wipro with the stop loss of around 435, and the positional target on this counter can now be 475 to 480. Mind it, this target which we are talking is not for a week or 15 days. It's going to be for the whole month or in the time to come.
Also, let's talk about OMCs, right? They are expected to be in focus. There is a windfall tax cut coming in that one. What do you make out of that? It is a situation that we're looking at where the government has cut in the windfall tax on crude oil to 1,300 rupees a ton from 5,000 rupees ton earlier, while cutting in also the diesel windfall tax to rupees 0.5 per litre from 1 per litre. What do you make out of OMCs? What do you like within that space?
So certainly the direct impact can also be on the Reliance. So that is a counter to watch out for. I think this trend which we saw on Reliance 3 days back, it was trading at around 24.50. Now it's at around 25.50. So it's gaining the momentum. I think with the stop loss of 25.25, one can certainly buy Reliance with the target of 2600 plus. The second is BPCL. Again, after a massive run up till 480, this counter has come down and now consolidating near 450 levels. I think with the stop loss of 445, one can initiate buy on BPCL also, and the targets can be as high as again 480 and even higher levels.
Kunal, also let's talk about Nestle India. It is the top gainer, of course, and the company has set in the record date from the previously announced stock split, which was approved by the company's board. That is apparently going to be at Jan 5. Not a fresh development, but just a development which suggests that the board approval will, perhaps come in on Jan 5th, which is the record date, perhaps. What do you make out of Nestle India's chart right now? The top gainers, furthest team left to this one.
So, Nickey, if you look at the overall formation since September 2023, this counter is in a clear positive channel and it's making clear higher top, higher bottom. Just 2 days back, it made a bottom right onto the support, which was 24,250. I think one can initiate buy even at the present level. The stop loss on this can be 24,500, which is just 150 points away from the present level. And the targets can be as high as 25,500 kind of levels. Mind it, again, it's a positional trade, so one can definitely trail the stop loss and hold the position for the whole rally from here on.
All right. It also needs to be noted that in F&O ban, it is Manappuram SAIL, India Cement, Hindustan Copper, Balrampur Chini, which apparently is in the ban. And what comes out of the ban is Delta Corp. Your view coming in for Delta Corp there. You think some moves out there for Delta Corp now?
Not really. Again, this counter was more or less underperforming the whole market. Yeah, it's in the sideways consolidation since September, and now this counter is trying to come out of it. But I think still there are some kind of resistances on the chart. 155 is the level to watch out for. If the counter manages to cross 155 on the higher side, then we'll just see a fresh breakout coming in with the target of around 180. One can initiate a buy. But for now, I'll stay away from this counter and I'll wait for the 155 breakout to be seen on the closing basis first.
What I'd also want to highlight is the stocks in news and the Motilal Oswal development on public sector bank, where it's given top picks as State Bank of India, Indian Bank, and Bank of Baroda and Canara Bank, where they've revised the target prices across the PSU banks. Has spoken about the earning pool, which is expected to grow in to 1.7 trillion by FY26 versus 573 billion in FY22. So that's a big jump. It speaks about the margin performance being resilient and higher mix of MCLR to shield the margins. Also speaks about the capitalization level, which is steady, solid profitability and new investment guideline, which is expected to boost in the tier 1 capital, and 1% ROA from ambitious to now sustainable is what looks like within the PSU banks. What do you like within that, Kunal?
So I like SBI the most. The only reason being there was a fresh breakout seen on the chart just a couple of days back, and that breakout was placed at around 620. And since then, this counter is just in the run up. It's now at 650. I think there is still a lot of room for the upside even from the present level. Though the risk reward ratio is certainly unfavorable in this entire market move, one can wait for a kind of a bit of correction on the chart. I think good support can be around 640s. So if the counter is available near to 640, one can certainly buy with the stop loss of 635, and the target can be as high as 675 to 680. And the second counter, which I like the most, again in the same segment, is Indian Overseas Bank. Again, this counter has given a very fresh breakout. Just yesterday itself, the breakout was placed at around 44.5. One can initiate a buy on IOB also with a target of 50 plus. The presently it's trading at 45.7 with the stop loss of 43. One can certainly initiate a buy on this counter also.
All right. Any other recommendation that you have for the day, which could be perhaps a stock which looks like is on the verge of breakout, given that now we're sitting in a markets which relatively are consolidating?
So the first is again Indian Overseas Bank itself, yesterday's move, and today you can see in the first 5 minutes itself the counter has already shown a tremendous strength of around 2.5%. So one can initiate a buy on IOB with the immediate stop loss of around 44, and the target can be 50, which we already discussed. The second is Nazara Tech. I think this counter is in the momentum since last 2 to 3 days. Today also it's going really strong. It's above to 901 right now. I think with the stop loss of 880, one can initiate a buy on this with the target price of 925. And the third is Borosil Renewables. This counter again showed good momentum yesterday in the second half. Then it took a pause but closes near to the high of the day. Today it's in again momentum. I think one can initiate a buy on that also. Stop loss being 435. The first target can be as high as 465.
All right, Kunal, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation with us. It was indeed a pleasure seeing you after a while. Let's navigate our discussion quickly to the fundamental side of the story. Ashutosh Mishra, Ashika from Ashika Stock Broking joins us this morning. Morning there, Ashutosh.
Good morning, Nickey.
What do you make out of the current? This is perhaps a bit of a re-rating candidate again, PSU banks. There is a sharp run-up which we've seen in terms of the YTD performance, in terms of the outperformance. Valuations still trade at a discount as compared to the historical averages. Do you find that counter attractive?
So still there is a lot of juice left in the public sector bank. The simple reason is that the reform which took place between 2016 to 2021 in the public sector banks, the dividend is still coming out. If you see, there is adequate room for them to grow. And especially if you look, the biggest issue which banking sector as a whole is facing at this point of time is deposit mobilization. Their public sector bank has a very strong foothold. So keeping that in mind that they have a best deposit franchise within the whole banking sector. And from that perspective, the growth looks quite good for them at this point of time also.
Between private sector banks and PSU banks, I'm sure that's a debate that you must have heard enough number of times by now. And now adding more to it is the FII situation, which looks like it's slowly, gradually now turning into the favor of Indian equity markets, given at least the performance that we've seen for the last 2 months. In light of that, what do you make out? Do you like private sector banks more, or still would you favor PSU banks?
So there will be different type of trade in this. Like when you comes FI side of it, once I think more allocation will start coming, especially from the next year onward, we will be seeing many private sector banks also participating in. Investors with a relatively larger view will continue to play with the private sector banks, because if you look at market share gain and other part, they continue to take market share from weaker public sector banks, and that trend is continuing. So there is adequate room in private sector banks, especially from the growth perspective. In the public sector bank, there is a more of a I see a more of a valuation play which has already been done. But yes, there are some more rooms available, given now we will be sitting to FY26 in few months from here. So some more room will be open in the public sector bank. What we need to focus, especially between the debate between private and public sector banks, that which bank is able to sustain the growth going forward from here. And market is a bit undecided, given the difference between credit and deposit growth is quite big at this point of time. And if that gap does not fill to the great extent, then we need to take call that if the deposit franchise remain strongly with some of the large PSU banks, then they may have an upper hand out there. But time will tell. At this point of time, we are finding both of them looking quite attractive, given the growth opportunity which they have and the way they are placed in. Where private sector banks is way ahead of the many public sector bank is on the technology, and technology is a very, very important part of the banking. We cannot ignore it. Now the banks are not only a pure financial institution, it's a technology institution. And there, apart from SBI, performance of many other public sector banks is way behind what their private peers are doing.
Sure. I think the big theme, perhaps, I'm sure even you would agree, is that's playing out is rate cuts for 2024 at least. You talk about real estate, you talk about NBFCs, maybe you could talk about, a bit of auto counters there. What, according to you, will take the center stage within this once rate cuts come through? Of course, we've got to be cautious of what we really asked for. And going by that, we're not really anticipating huge rate cuts to come through both the US markets and thus for Indian equity markets. But with that in mind, which sector do you think will perhaps be the major beneficiary of this move?
So we have already seen that real estate and auto sector has aggressively participated in the last few months on expectation of no expected rate cut in the coming thing. And sector performing also quite well. Both real estate, if you look at the numbers, and auto companies also, they are delivering one of the best numbers, business growth number at this point of time. I expect this trend to continue. At least we may see some pause probably in the auto somewhere post-elections, because normally what happens is that pre-elections, general elections, we normally see auto sector doing quite well, because the whole ecosystem is geared up in such a way that we normally see much higher sales before any of these larger general elections, which is currently taking place there. In real estate, probably we may see some cool off, but if you see longer term, things looks very good. In India, apart from the rate cut, we also know that India is getting into the global bond index. So the large inflow of the fund will be there towards the India. So the ultimate, if you look at the cost of fund in India, is expected to come down mid of the next year. So rate cut plus large inflow of the fund is expected to play very well for banking and especially NBFC sector. So NBFC is still not participating. So somewhere next year we may see that they start getting the benefit of the whole thing.
Could you specify names that one can look at within banking and, of course, NBFC space?
Pardon once again?
The names, the top picks within that space?
So if you look at public sector banks, we like State Bank of India, we like Bank of India. So these two are looking quite good to us. And given Bank of Maharashtra is also another bank which we clearly like is. On a private side, we have a very positive view on HDFC Bank, Axis Bank, IndusInd, and Bandhan Bank.
All right, that's the view coming in for the entire banking space. But these microfinance, NBFCs, MFIs are also doing extremely well. Bit of the IPOs also opening up for those ones. You had Muthoot Microfinance in the previous yesterday, of course. How are you looking at IPOs like NBFCs, MFIs? Is there some interest from your end as well?
So MFI as a space is doing quite well. Like no, this was a sector which was only a major hit by the COVID credit cycle. So now it has come out very strongly of that. RBI has done a very major structural reform in this sector, which has played very well for the sector as a whole. And I expect if no negative is being now done by any of the political party in this upcoming election, then probably for next 2 years, the sector is going to do very well for that. From that perspective, microfinance companies look very interesting at this point of time. They are seeing both the strong loan growth coming and improvement in the margins and lower credit cost. So this is a mixture is clearly indicating very strong profitability for the microfinance. So I expect a good demand for the good microfinance also. See overall this space is doing quite well. Like I just refer that some of the players which normally used to avoid this space like Kotak Mahindra Bank and Bajaj Finance. If you ask them 5 years back, they say that they will never enter microfinance space. Today they are very aggressive in this space and clearly showing that even one of the most conservative player in the market is now clearly looking to grow in this segment, given the structural change which has been carried out by the Reserve Bank. Yeah.
Also, 3 IPOs open up for bidding today. One of them, of course, is Happy Forgings, which is coming at a reasonable amount of discount as compared to the bears. You have RBZ Jewelers, which is a 100 crore IPO, of course, a jewelry maker, perhaps 4th company, which is coming out with an IPO in this year. And Credo Brand Marketing, another one. What do you like within the 3 names that I have put out?
So forging is a very interesting play. What is happening on the manufacturing side of our country and the way the global shift is taking place at this point of time. So the forging, Happy Forgings looks to me very interesting out there. Yeah.
All right, gentlemen, I'm just going to leave it at that. And thank you so much for taking out the time and having this conversation with us. Well, primary markets are buzz with activity, right? I'm going to be addressing in few names that apparently you need to keep on your list today as these IPOs open for bidding. RBZ Jewelers, that's the first one that I have on the list, where it's a 100 crore maiden public issue by the antique bridal gold jewelry maker, which will open up for bidding today. And of course, it's an Ahmedabad-based company which has set the price band for this IPO at 95 rupees to 100. This will be the 4th company coming out with an IPO in the calendar year after Motilal Jewelers, Senco, and Web of Jewelers. Credo Brand Marketing. It's a Mumbai-based Mufti jeans brand. I'm sure must have heard that name. Will be the 3rd company getting ready for the IPO launch, of course, during December 19 to December 21st period. Now, Credo plans to raise at least 550 odd crores. We're going to be talking to the management in just a bit, but the price band has been fixed around 266 to 280 per share. These are 2 relatively mid-sized IPOs. Well, if you see Credo, it's a good size. It's a 500 crore IPO that will be hitting the primary markets. But I think the bigger name of the lot will be Happy Forgings. Of course, it's a valuation game out there and it comes at a significant discount. It's a Punjab-based heavy forgings and high precision machine component maker, which will open up. It has already opened up for subscription. It's 1,009 rupees. Now 1,009, beg your pardon, 1,000 odd crore issue for subscription between December 19 to December 21, and the price band is in the range of 808 to 850 per share. We also caught up with the management to understand more about the unique positioning, basic structure, and the clients. Catch a piece of this conversation. All right, tell us more about your business. Let's start off with a very basic understanding of what does the company do, which are the clients it caters to, and what is the segment essentially that the company is looking into.
So company is into forging and machining business. So 85% of our revenue comes from a complete machine component business. And it's not a sector specific business for us. So we cater to commercial vehicle, farm equipment, industrials, and off-highway vehicles. And for us, we are in a product range from 10 kilograms to 250 kilograms. So basically on a heavy side of the business. And so majorly it's a complete machine component business for us.
Sure. Just getting further into the financials bit now, revenue concentration seems to be a major risk given that 70% of your revenues come from top 10 clients. The concentration has come down from 80% to 70%. What are your further plans for diversification going forward?
So we have around 66 clients on board now, and the top 10 clients for us constitutes definitely 70% to our revenue, but these clients are very old with a relationship of between 11 to 21 years of age now. And even the business is growing with these customers. And for new clientage, we have onboarded over 30 clients in the last 6 years, majorly around 24 clients in the industrial sector, especially for wind turbine, industrial engines in a heavy range. And this is a sector which is growing for us, where we have incrementally improved our revenue from 3.7% to almost 14% in H1. So in terms of client concentration, it has already reduced to 67% in H1, and going forward, we feel it's going to reduce going forward as well.
Well, that was the management of the company. Of course, spoke about the revenue concentration risk and also the basic profile of the company, but it needs to be highlighted that the valuation, or let's just say the PE of the company, is 35 times as compared to 40 times, 45 times by other peer sets, Bharat Forge, Craftsman Automation, Ramakrishna Forgings, and Sona BLW Forgings. These are some of the other names which enjoy a valuation anywhere between 40 to 85 times, and this is being offered in 40 times. So clearly a valuation catch-up game till the listing pop. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.